Hello, myself Nitin Dhawale. I'm working as an assistant professor in commerce at Sundarao Solanki Mahavidyalaya, Majalgaon. As a part of online refresher course on e-governance, e-learning and learning management system, which is conducted by the MMTPC Dr. Babasaheb Ambedkar, Marathwada University, Chhatrapati Sambhajinagar. I'm presenting my macro teaching on the topic of accounting cycle. Myself, roll number 73. So, in this micro teaching, we are going to talk about the accounting cycle. Friends, the accounting cycle, first of all, we need to understand what is cycle. Cycle is nothing but the chain of interconnected activities. The one activity depends on the other and it goes on revolving in nature. So, likewise, accounting is also a continuous process which starts from the happening of the event, then recording, then posting, preparing the trial balance, and it ends with the preparation of the final accounts, for example, profit and loss account and balance sheet. So this chain of happening of these activities goes on a continuous basis. Uh, so that's why it is called as accounting cycle. So first of all, we need to understand the meaning of accounting cycle. Nothing but the sequence of accounting procedures which is used to record, classify, and summarize the business transactions. Whatever transactions are takes place in the business, these transactions are recorded in the books of accounts on a regular basis. So we need to understand the process of accounting cycle. So this cycle starts with the happening of event, and these events are recorded on the basis of the source document. For example, if a particular person, for example, XYZ, sells the goods of rupees 100, goods of 10,000 rupees to the XYZ person. So that is nothing but a particular transaction, and these transactions are documented. For example, the tax receipts, or you can say the sell invoice, is to be prepared at the time of the transaction. So on the basis of that sales invoice, we tend to record that transaction in the books of accounts. So source document is important because transaction should be supported by the document. After that, we record the transaction in the books of accounts. Basically, the day-to-day transactions are recorded in journal book. After recording the transaction in the journal, the posting of these individual transactions is done in the ledger accounts. And finally, all the individual ledger accounts are balanced and these balances are transferred to the trial balance. So at the end of the year, we prepare the trial balance, and on the basis of trial balance, we prepare the financial statements. These financial statements are nothing but trading account, profit and loss account, and balance sheet. So basically, source document is all about the evidence on the basis of which we record transactions in the books of account. So without evidence, transactions will not be recorded in the books of accounts. So we need to keep the evidence of each and every transaction while we record it in the books of account. So recording is the next step. So recording is nothing but recording transactions in the books of accounts. After recording, we uh, generally tend to post these individual transactions into ledger accounts. So these are nothing but the sophisticated books accounts for the each purpose, or for example, we can trace the transactions in a systematic manner. So that's why we use different books of accounts in the business. So after posting, the preparation of trial balance is done. So trial balance is nothing but the summary of all the ledger balances, whatever debit and credit balances are there. The summary of this debit and credit balances is mentioned in the trial balance, and on the basis of trial balance, whatever last step of accounting cycle is nothing but the preparation of final accounts. So on the basis of this debit and credit balances, we prepare a trading account, profit or loss account, and balance sheet. So these financial statements are used by different stakeholders, for example, shareholders, government agencies, customers, debtors, creditors, all the stakeholders use this financial information for their decision-making purpose. So, up to this, we have learned the accounting cycle, the meaning of accounting cycle, and how it starts, from which step it starts, and where it ends. So it starts with just let's take a quick recap of this. It starts with the source documents, or you can say happening of event, and it ends with the preparation of the financial statement. So that is what all about accounting cycle. Thank you.